Welcome back, ladies and gentlemen, for what is going to be nothing short on this magnificent Monday of another jam-packed daily cryptocurrency market update. I'm wishing you all a wonderful day wherever you are and whatever it is you are doing. As always, we have a hell of a lot to get into. And we're going to be starting things off by taking a look at Bitcoin and the fact that this still needs to be proven to be just a pullback in what is a broader uptrend. But it's very much been our opinion that this is just a pullback in what is a broader uptrend, and you don't bet against the trend. And ultimately, we still have, I believe, the best days for the cryptocurrency market in regards to this bull market ahead of us. And we aren't too far off of that. Certainly when we look at Bitcoin dominance, when we look at some altcoins against Bitcoin, when we look at altcoin ETPs, when we look at the total too, that's very much signified that we've got some pretty insane targets ahead of us, others. And we'll be flying through some of that, but we're going to be starting things off with Bitcoin dominance. Whenever there's a pullback, people always call for impending doom. I think some people are genuinely cash heavy at the moment and really want that to take place so that they can kind of gobble things up in a Dan Pena style or a Robert Kiyosaki style manner. However, Dan Pena, who is a funny guy to watch, I guess, I don't really know what else, has been holding cash for years, and there's a huge lost opportunity there, and we think you need to be a bit more intricate as an investor. However, that's just our own take on things. I do think that a crash and that impending doom will come, and we're going to be talking about that. We're going to be talking about yield curves. We're going to be talking about the 30-year and the 2-year yield curve, which is now positive. Many people saying that this is a glooming or a kind of beckoning sign of a recession. Now, I believe that the yield curve to watch is the 10s and 2s, and we'll show you all this on the charts once we've got over the crypto stuff. We'll be starting things off, like I say, with Bitcoin and coin shares. I do believe an absolute nightmare is coming. I think they want to level everybody off to an equal class, and they're going to do that through deliberately destroying the financial system as we know it and causing a kind of crash that spurs on a reset in a new global financial system. And could this be the time that happens? Well, maybe. We have had the steepest yield curve ever, and that could be predicting what's to come. Or it could come later on down the line. But whether this is the big one or not in regards to the crash that I do think is coming, and we're watching the 10s and 2s for that, my opinion, it has been my opinion since we got back into the market in 2023, and we've largely been right on this, is that the nightmare doesn't come until after the bull market, or certainly once a good bit of it's happened. And we are obviously, of course, watching the 10s and 2s, not so much the 30 and 2s, which every analyst is now throwing around on Twitter saying, this is a sign that a recession is here. Well, I don't think it is. Unemployment's also something really important to watch. It's going to be an interesting week for earnings. Not massive amounts of data. I think got Jerome Powell speaking today or tomorrow, one of the days. And that's going to be something to watch. But let's get into it all, guys. Let's stop rambling on. So we're going to be talking about the cryptocurrency space to start things off, and then we'll be getting a little bit sort of macroeconomically in regards to talking about the impending doom that I do think will come, but I think we'll be rich enough by that time, and hopefully out the markets by that time, to not really have to worry about it. That's just what I'm going to try and do. But we have continued to say throughout this pullback, and it's been a rather long one, that Bitcoin is just pulling back. And what is a broader uptrend? It's very much broadening, and I think is going to result to eventually that 151k target that we've had for a while now. This is very much just a broadening channel. People don't like to wait. The markets are amazing at taking money from the... One of the comments I always get, certainly in regards to altcoins that we've given price predictions for, and we've given, we said we think something would be here in 6 months. Some of them got there, some of them didn't. It's just how the game goes. We can't, time things perfectly. But people don't want to wait. As an investor, 6 months isn't a massive amount of time to wait. And if you look at the first price prediction that we gave, which was at the 41k range from this inverse head and shoulders, it took from March 2023 to December 2023 to play out. So considering we only triggered this broader head and shoulders in February 2024, we've got, and it's a bigger pattern, so there's a bigger time period for it to play out. The time that the actual pattern took to form to actually play out, that's when we kind of time it out. We've got a while for it to take place, and we do think it's going to get there. We've got targets on the likes of Total 2 for the $3.8 trillion mark. It's currently at 1, and of course we do have targets. And when you add up the market caps, if you are considering becoming a Patreon, guys, get on the Patreon and go and quickly check out last night's meeting, because I break down, okay, if the targets for others, which is everything outside the top 10, the Total 2, Bitcoin, a variety of things that we're looking at get met, where's that going to put the market cap of the overall space? And it's actually quite logical, and you've got many things that point to the same direction. So we're bullish on the cryptocurrency market. We've just said this is a pullback. With crypto, you've got to add a little bit of nuance. You've got to expect the volatility. And I think we've always said this, given enough time, we'll be right. And I think we're kind of getting to that with a kind of improving macro environment. So Bitcoin very much just pulling back. This could be the end of it. We shall see. Let's move on to what we like to do every single Monday, and that is take a look at CoinShares report. So CoinShares basically track all the products that are derived around the cryptocurrency space. So the ETFs, the ETPs, so on and so forth. And the Digital Asset Fund Flows Weekly Report is what they call it. This is 191 and the 5th largest weekly inflow on record of $1.4 billion. It's interesting that we've been pulling back. We're now seeing sort of probably who uses the ETPs being potentially smarter money. Still shocking to me, by the way, guys, that you can't actually own BlackRock's ETF in the UK. Yet you can, so instead of a regulated product, they're saying, okay, well, you're not allowed to buy that as a citizen. You've got to go and to find it on an exchange, which is still crazy to me. And also, so it means larger money's getting involved in this, I guess, from that. It was a pretty interesting month in regards to inflows. To read the quick take, digital asset investments products saw further buying on price weakness, with inflows totaling $1.4 billion last week, bringing year-to-date inflows to a record $17.8 billion, far surpassing 2021's inflows of $10 billion. 2021 was the bull market, the height of last bull market, caused by all the stimulus, yada, yada, yada. And institutional products didn't see as much as they've seen in the first 6 months of this year thus far. And I don't even think we're in the sort of 2021 stage yet. Isn't that interesting? Now, the argument for that, of course, and it's a good argument, is that, well, we didn't have the ETFs. The interesting thing is this bull market is largely going to be driven, I think, or there's going to be a major driver from institutional investors that are getting their hands on cryptocurrencies through ETFs, ETPs. Remember, we are looking, and we're going to come on to that in just a second, at exchange-traded products that track altcoins, like Grayscale Digital Large Cap Fund, the GBTC, Grayscale's Bitcoin Fund made our target, then the GETH, Ethereum, and now we're looking for the digital large caps in the kind of flow of money style manner. So Bitcoin saw the 5th largest weekly inflows on record with $1.3 billion, while short Bitcoin saw the largest weekly outflows since April at 8.6 million. So there's not a lot of volume going through the short, but it's good that the shorts came off, the longs came on. Ethereum, which saw $72 million inflows last week, likely in anticipation of the imminent approval of the spot Ethereum ETF in the US. Now, Grayscale's digital large cap fund still flowing out. Grayscale have been a thorn in our side with all these products because, of course, they had the G product, and that's people have been taking out of that, and we said it's a good indicator that the ETF is coming because they're going to position in cheaper vehicles that track Ethereum. You can, of course, see the flows. So digital asset investment products saw a further buying on the price weakness. It talks about the year today. It said regionally the US led the charge, of course, with $1.3 billion. So out of $1.4 billion, the US was responsible for 1.3. This is why getting approvals for ETFs in the US is so important. It's where the money is, guys. Bitcoin saw the 5th largest weekly inflows on record, 1.3, while the short products saw outflows. We believe weakness due to the German government Bitcoin sales and the turnaround in sentiment due to lower than expected CPI in the US prompted investors to add to positions. Yeah, because we're getting good conditions on the macro. Obviously, unemployment's one to watch. We'll talk about the macro in just a second. It's why, and we hate to continue to bring Stan Druckenmiller up, but he's one of the greatest investors. He's somebody I truly admire, wanting to follow in similar footsteps to him. It's interesting that we saw him move from Nvidia down to the IWM, which is a very interest rate sensitive basket of small stocks within the United States. The largest one is, I think, $50 billion. It's a chip, and then it's MicroStrategy, I think. I think MicroStrategy might elevate to the S&P 500 eventually. But he's a great indicator of the kind of, if he's taking that bet, it means he thinks risk is going to do well generally. And we very much agree, and we think crypto is going to be the fastest mover of that. So a wide range of altcoins saw inflows, most notably being Ethereum, which saw $72 million, being the largest inflow since March, and likely in anticipation of the imminent approval of the spot Ethereum ETF in the US. Solana, AVAX, Chainlink saw inflows of 4.4, 2 million, and 1.3 respectively. City did an interesting article, actually. I'm going to do a Chainlink video, I think maybe later on today or later on this week, where we look at City's publication in regards to Chainlink and how they think it's going to steal the kind of limelight from Bitcoin. Talking about Solana's absolute status, we've got a $2,000 target for Solana. Don't think it's going to play out. Just give it time, guys. Just when we give these technical predictions, and so many of them have come to fruition, give me time to be wrong. Okay? We're not going to be able to give you the exact day, the exact month, but just give us time to see these play out. And the beautiful thing is with that is not only do I get to gloat when I get it right, but you guys get to become believers in technical analysis, which I think is the only way to level the scores in regards to being an investor. You know, you need to have a technical perception of the charts. I truly believe that, more so than a fundamental one of what you're investing in. I don't think those things necessarily drive things as much as they once did. I think value investing in some areas is kind of dead. You know, we gave our doubling for Tesla just like we gave our doubling for Amazon. And I'll show you this because we often go on segues and I don't show you what we're talking about. But we essentially were calling for Amazon a doubling in price. And we got completely laughed at the time because Jeff Bezos was selling and this fundamental reason and that fundamental reason. Well, since we called it out on the 130 range when we were speculating on this right shoulder forming, and we have $261 target, it's up significantly. You know, it's nearly, or did get to $200 at one point, which in the stock market is a huge gain, by the way, guys, if you take it from the top, 52%. We also called a 25% move for oil. We're calling for, not oil, gold. It's done 25% since we called the breakout on it. We're now calling for that with Tesla. We can do it. You can divide Tesla by Bitcoin to see which is going to outperform. And if we've got higher targets for Bitcoin or Tesla and you know, Bitcoin's going to outperform it, it's a good risk environment generally. So I don't know where I was going with that, but generally things look fantastic across the board, and we are seeing flows into altcoins. This is a Grayscale Digital Large Cap Fund. I don't see anybody else covering the ETPs. And if you become a Patreon, go and watch last night's meeting. We go into some of our crypto stocks. We've got crypto stocks that we think could 20x. Crypto stocks, essentially. Grayscale Digital Large Cap, walking, talking, quacking like a duck. This aligns with others, how far we think it's going to move, so on and so forth. You know, the stars really and truly, we believe, are aligned for us. Was there anything else I was going to look at? Dollar's important to watch. I don't think it's a massive week for economic data. So what I want to do now, guys, is now that we've sort of hopefully convinced everyone to be bullish on the cryptocurrency space, I want to talk a little bit about the macro. So today, and because it's worth talking about, Twitter was abuzz with this rhetoric. So the yields on the 30 years Treasury bond has risen above the 2-year Treasury bond, which it should do. This is how we get the yield curve inversion, signifying that nothing's wrong. When you get those shorter dated bond yields that are offering a higher return than the longer ones, that's not how it should be. If you're going to lock your money up and commit to a longer duration product, you should get a high return as a result of it. It shows a lack of confidence. These bond yields, we'll introduce them in just a second, have been a good indicator of something not being right and a breaking coming, or something that could lead to a recession. But this is a rare event historically signaling an imminent economic recession. This inversion can negatively affect the stock market, with sectors like the financial industry being part of vulnerability. So let's cover this. This, of course, was Holger something, highlighting the positive spread. Let's go over to it. We're technical traders, guys. We derive our opinion on the markets purely technically. Purely technically. Everything else for us is secondary. So let's go and let's take a look at the times where this has actually gone positive. It's just like that kind of yield curve, or not yield curve, whenever the Fed pivots, the markets crash. That's simply not true. The markets will crash when they lower rates if it's already something going on. if you look at the past 5 times the Fed's pivoted and lowered interest rates, the markets have actually gone up and away. Or the last, 3 times out of the 5 times. It's only 2 times they've actually crashed, and that's because there's been a kind of nightmare as a result of it. So wherever you want to take this from, this is it's a negative yield curve. It goes positive, like what they're calling for at the moment. I think it's at 0.004, so just about positive. First of all, this hasn't always gone negative to predict a recession, like the 10s and 2s, which is the main one that we're watching, which has been great, like you can see it predicting recessions. But if we look at every time this has gone positive and what the market's got the S&P have done on here, often they've gone higher. Except for, of course, the dot-com crash. But if you look over here, and actually depending on when you want to take this, it's not being too bad. And it didn't even go on inverted here. And if you look at the 10s and 2s, this is the one you want to watch. Forget the other bond yields, just watch this one. That's my honest take. This will uninvert, but usually it's not a perfect signal. It doesn't just uninvert and then you're in a recession. Sometimes there can be a period of time. So if you look at when this uninverted, it uninverted in March. The recession didn't come till the end of the year. So there was like a 6-month gap, so on and so forth. This uninverted and then sort of chopped around. Initially uninverted in June 1989, and the actual recession hit in 1990. So there's always this kind of period, and we've always said, we've called this sweet spot that you're in the grace period. What I think, so we are watching for this, and we will be on red alert when it uninverts, because we do think that means something's coming. So to finish on the 30s and the 2s, I don't think it's a great metric. It's a kind of later metric. It's not as imminent as perhaps the 10s and 2s, if you will. And you can see that, you know, and even if you look at, okay, yeah, it uninverted and then there was a crash, like for example here, it happened a long time after it uninverted. So I don't think it's a great metric. I think the 10s and 2s is. I do think this will uninvert, and that's not going to be good for the markets. It will signal something's coming, just like it has done the past sort of 4 times. You know, are you going to bet that the 5th time isn't going to happen? It could always be a possibility, but you need to be on kind of alert for that. The point that I'm making here is this is still got time to play out. You know, this could play out towards the end of 2025, which is kind of what we're looking at where this bull market ends. So don't be too worried about that. So I think we've rambled on for long enough, guys. I'm wishing you a magical Monday, wherever you are and whatever it is you're doing. On that note, I'm going to love and leave you. A like and a comment is always appreciated. Make sure to hit that subscribe button, and I'll see you all in the next one. Thanks a lot for watching, guys. See you in the next.